Good day, this is Justin Lagria and we are going to talk about financial statements. Financial statements are more than just numbers. They are powerful tools that help us make informed business decisions. In this presentation, we will explore how to interpret financial data, go beyond the surface, and find meaningful insights that guide smarter strategies for success. Let's get started on this journey to making numbers work for us.
Understanding financial statement is essential, not because they are the end goal, but because they are powerful tools for decision making. So, financial statements are tools, not end goals. They help point a picture of a company's financial health, but their value lies in how we use that picture to navigate and grow the business. They are useful in making informed business decisions, from evaluating investments to managing costs or forecasting future performance. The insights drawn from financial reports guide key strategies. Knowing how to interpret them is critical for effective management because it's not enough to have the data. You must understand what it means. That's how smart decisions are made. For visual reports, on the right, we see sample balance sheet. It outlines assets, liabilities, and equity, key components of a company's financial position. So the total assets is $52,484. Total liabilities $37,384. And for the shareholders' equity, we have $15,100. So this balance shows the company is financially structured with a healthy equity buffer essential for sustainable growth because of
So here's the example of the financial statement. The business is cash, and the cash that the business has amount of 112,250. And as for a take example, a particular financial statement balance indicated in the following cash. So that's the 112,250. Above is a financial statement account with a corresponding amount taken out the balance sheet. By just looking at it, we can have a several interruptions.
So let's say, for example, we have a financial statement. As you can see, we have income statement for the month ended March 31, 2018. So our consulting fees amounting 48,000. So these are the expenses of and the month ended March 31, 2018. First is commission expense 7,500, salaries expense 18,000, travel and entertainment 3,975, advertising expense 1,147.50, utilities expense amounting 1,072.50. So next is we will add all the expense. So the total is 31,695. So to get our net income, we will minus the consulting fees and the total expense. So the total is 16,305.
By looking at the income statement above, we can say several things. There are more revenues than expenses, thus resulting to net income. That net income of the business is 16,305 pesos. The highest expense is salaries with the amount of 18,000. And for the lowest expense is utilities with the amount of 1,072 pesos point 50 centavos.
These are just several things that we may be able to see from the above statement. Looking at it deeper, we can say several other observations. For example, A. If we increase 1 peso more of revenue, assuming expense does not change, net income will increase in the same amount. This means that revenue maximization income will increase. Having more sales of services will have a positive effect in net income. B. If we decrease 1 peso in the expense side, assuming revenues do not change, net income will also increase in the same amount. This means that expense minimization, decreasing or controlling expenses, will have a positive effect on net income, meaning net income will increase.
These are just a few of the things that we can say of the income statement. We have just several tools seen, however, we can do more interpretations of the financial statements if we use